emerging technologies transform the sector on the global stage. So please welcome my panel, Samina Hussain-Letch, Executive Director of Square UK, Jaidev Janardana, CEO of Zopa, Francesco Simoneschi, co-founder and CEO of TrueLayer, and Paul Taylor, founder and CEO of Thought Machine. Please welcome them. Hi, lovely to have you here. Thank you for joining us. There's been a lot of talk, I mentioned it in my opening, Janine mentioned it, just about how much has changed in the last 12 months geopolitically, economically. And I'm curious to ask all of you, and anyone feel free to jump in, which is how do you as businesses plan for growth with all this uncertainty that we've seen in the last year and that we are seeing going forward? It's probably one of the most turbulent we've had in history. What assumptions do you need to make to carry on going forward and growing the business here in the UK? Paul.
Well, first of all, I'm not sure it is that turbulent. We've all got very short memories. We just left a massive pandemic, which created huge levels of uncertainty. We've already mentioned the great financial crisis. There's various graphs of inflation comparing it to the oil shock of 1973, 1974. So the one thing that you need to be certain of, that the world goes through occasional periods of stability, and the early 1990s and 2000s were particularly stable, but there's always something coming along. In my view, I am not overly worried about the current situation. I believe that things like tariffs, when everybody's a loser, that things like that will die down. But I think the fundamentals are you just have to build a business that has incredible levels of internal stability. You need to be very, very aware of as an entrepreneur that one of the things that's most likely to cause damage to your business is something you've never thought of, and therefore you just need to be prepared.
Interesting. Jaidev, I'd like to get your thoughts on that. You just recently reported your results, did really well, doubled your profits. Are you going to plan differently going forward? How do you navigate this current environment?
Yeah, I mean, thank you. I would echo Paul's thoughts, right? Particularly, I think people on this stage right now and kind of our fellow cohort of entrepreneurs haven't had the luxury of stability for a long time. And if I go back over the last 10 years or so, you had 2016 and the Brexit shenanigans, which kind of carried on well into 2019. Then
Brexit.
then you had the pandemic, the cost of living crisis. So I think as organizations, we are now, I would say, used to dealing with some of that stuff. And I also say, the last thing I thought I would have to prepare for is the sun shining into my eye, sitting here. So you never know what to expect.
Don't worry, it'll be raining tomorrow.
And I think. I again echo, as of today, I feel optimistic about the UK. We are, as a country, we don't export that many goods, definitely not to the US. So even if the tariff were to continue, which we all hope it doesn't, but if it were to continue, I think UK would be one of the less impacted ones. And thus, if as industry, as government, if we can be aligned and continue to provide a relative stability, then I think as a business, as a country, we can do well and continue to progress and grow. So I remain optimistic. We are not thinking of changing our plans. When you run a bank, you always run multiple stress scenarios. In fact, I have a board meeting tomorrow where we'll be discussing our latest set of stress assumptions.
What do they range from and to?
The Bank of England sets us one, which is usually pretty penal, which is unemployment of 8.5% to 9%, which was last seen at the Great Financial Crisis, combined with inflation closer to what the cost of living crisis do. So as banks, we are preparing for scenarios as severe as that. Thus, while we prepare for those scenarios, I think when I look at the base case scenario, that still seems pointed towards some turbulence, but kind of relatively to what we have seen, more stability, and I think we'll continue to grow.
Thank you. Samina, what are your thoughts on this?
Yeah, I would echo the comments here about, instability and change is just a constant. Square was actually born 16 years ago during the global financial crisis. And a lot of what we're focusing on is using technology to help small businesses and SMEs to be able to endure the turbulence. So we've actually seen significant growth during crisis moments because that's when people are looking to solutions like technology to actually help them, weather the storm. So we're actually very optimistic about the UK as well. We're a global business, but we do have a significant operation in the UK, and we're very optimistic about our investment in the UK and what the future holds. So no change in our outlook as well.
Thank you. Francesco, do you agree with everyone else? How are you seeing it?
Yeah. So first I want to remind everyone that at some point we were banked by SVP. That's just another thing to add, right? Now, look, I think that for what it concerns TrueLayer, we really deeply care about pay by bank and development in open banking and general fintech infrastructure. And we just cannot refrain to be massively optimistic for a couple of things. One is all the progress that has been made. I think there is a general perception that open banking could have done more. I actually challenged that. We went a really, really long way. We are processing about 30 million payments per month, and we as a company, we are now building a payment network that is made of 30 million consumers. Like, it's a big number and keep growing at a very, very high pace. And we are really changing the way the world pays, and certainly here in the UK, we are changing the way consumers are executing online transaction, and completely sidetracking the incumbents and bringing incredible efficiency to merchants and the whole ecosystem. And so, if I look at what are the leading indicators of success, right? What is what is for us in the future? I see incredible scale continue to pile on top of this infrastructure. And on top of that, I think there are a clear agenda coming from the government, coming from the regulator to further improve all the progress that has been made and bring into the next step. Change, right? We said political change, geopolitical change as well. I think it's becoming more and more important to have end-to-end control of different pieces of the critical infrastructure, and payment is that critical infrastructure. And we see daily there are sometimes outages and maybe bits of this infrastructure coming down. I think it's so important that we have end-to-end control, that we have in Europe, in the UK, our own version of what is consumer payments and modality to process online and offline transaction. And the national payment vision, I think, is setting a very clear target in that direction.
Yeah, and actually I wanted to probe into that a bit further. Is this a watershed moment? Is this the time to try and change that payment infrastructure, which isn't working so well? What do you think? I know, Samina, you were also thinking about. Samina, what do you think about that? This is the time to grab that opportunity.
Our perspective, we have a saying at Square is we never want a seller to miss a sale. So we want to be able to have optionality for businesses out there to accept payments. That's critical. Optionality not only drives innovation, it helps reduce costs. It's a point of leverage when you're talking to some of the global payment networks. And so we're seeing national payments infrastructure as really, really critical in all of the different markets that we operate in. And as I said, it provides optionality, it helps reduce costs, and it drives innovation. What we think we need to see more of in the UK, and what we've seen in other markets as well, is that it's not just about the infrastructure, it's about multiple things that need to come together to really help drive adoption and to motivate that adoption. And we all talk about PICs in Brazil, and we talk about different use cases in different markets that have very different needs. But there are markets like FPOS in Australia, you've got Interact in Canada, that have had government intervention. It's also had commercial structures as well as the infrastructure, all of those things coming together to help drive adoption. And I think we're at a point in the UK where we're seeing really good intent with the national payments vision, but we need to see more in order to get that momentum going behind.
What more? What do you need to see?
We need to see infrastructure that is really going to help set us up for the future. And so we're looking at, obviously, account-to-account payments is critical, but how are we going to use this infrastructure for the future use as well? And we've been speaking about this morning, digital assets. These are the type of things that we want to see the infrastructure enable as well, because that's what the national payments infrastructure should do, is not just looking at what we're going to use today, but how is it going to help us solve for some of those payment needs for tomorrow as well.
Francesco, come in. Is this the moment now to start being less dependent on the US infrastructure?
This is absolutely the moment. Few reasons. One, we can build on top of, like, standing on the shoulder of the giant, right? Like, we have done 10 years of work. We come a long way. We already laid the foundation elements of what is gonna happen next. The second one, we have this lovely tailwind coming from, I would say, the attention of the government and the attention of regulators, and this sort of bona fide interest of all the different parties involved, and recognition that we build something that is really good and really valuable, but this can be absolutely taken to the next step. And so there are crucible moments, right? The way that Sequoia put that in the podcast, and this is one of those, right? Where you can really seize this momentum and build up on top. And then, yes, I think like those larger geopolitical facts are clearly, I think it's a different kind of building resilient kind of activity. It's more planning for, it's not just like the next couple of years. This is planning for the next 10 or 20 or 30 years. Is almost philosophical. How much you want to be entrenched or not entrenched with like a certain global piece of infrastructure. And I think like the reality is that we want to build resilience at different level of the infrastructure. That doesn't mean like canceling or getting away anything that we currently have, but it's more like building optionality, creating different avenues, different possibilities and opportunities for people to build on top.
And I think I would go beyond that. So payments is an important part of the thing, but I mean, another part of the agenda that I think we often talk about, but probably far little progress has been made, is digital ID. For example, so if I grew up in India. When I often visit back, you look at the India digital stack and the change it has done, and that's because the government thought end-to-end from ID to payments and bank accounts, all of that, rather than just focus purely on payments. And I do feel that in the UK, given strong amount of digital adoption our customers have, it's one of the countries with the highest amount of digital banking adoption. Not having a single digital ID creates so much inefficiency. It creates an issue in terms of how do we fight financial crime, fraud, and I think really is a huge productivity dampener for the whole ecosystem. So I think payments is an incredibly important thing to upgrade, but I also think we need to think about it more holistically, think about our digital IDs, and think about effectively the UK digital stack and what can that look like, and can that be a competitive advantage for the world.
Anytime a government raises the concept of a digital ID, it's hugely contentious. So I think this government are probably firefighting enough without raising that as an option. But I'd like to just understand, so all of you are quite neutral about the economic environment. You've gone through lots of shocks. What about the funding situation? Is funding harder to come by? Are the goalposts getting higher? How are you finding it, Paul?
Yeah, and by the way, just one final point. Paul Graham wrote an essay about does politics affect technology, and the answer is no. He looks through all kind of political, left-wing governments, right-wing governments, different countries and everything else. It's US-centric, but it basically says tech companies build what they're going to do completely irrespective of what political parties getting in, what regulations happen, and with the conclusion that tech is a far more important force in society than politics. And therefore, I mean, if you're on the political side, you always think, oh, it's so important, but really, there's many things that go on in the world where politics has very little effect in. But when it comes to funding, so you see a lot of contrarian, you see a lot of diversity of opinion on this thought, right? You will see many people in this community who say that growth stage funding is a severe problem, and you'll see many people who do not. Now, we also have to say that there's a lack of companies coming through to IPO. There's a bunch of companies struggling, but the two sides of the argument are like this. when you say a lot of companies are struggling to IPO, are they profitable? Are they growing? Very few are, and that is the reason why the IPO, again at growth stage, when you get a 25x multiple in growth, on revenue for your valuation, some companies still get that. I'm sure Revolut's up there with its fantastic multiples, but everyone else, you have to justify it, so that there. But I would say, I don't think there's any evidence that the best companies struggle to get funding. What is different is that 4 or 5 years ago, terrible companies got funding without any difficulty. So you can decide, if you think it's a good idea that terrible companies still get funding without any difficulty, then you could say funding. But my view is the market is far fairer, far more rational today. I don't really have any complaints about it. The one thing I would say is that, I don't know about my colleagues here, but Thought Machine, as we have got bigger, the source of funding has been more international. So we're funded by Temasek, Singapore Sovereign Wealth Fund. We're funded by JP Morgan and Tesla Sao Paulo. We're international banks. And so on and so forth. So I don't have any problem with that because we're a global company selling to all these regions and everything else. So, but if you need the money, there's enormous pots, but often they're not UK based, and that goes back to the whole pension argument and something else.
I mean, were you keen to get UK funding?
Well, we live in an ecosystem, right? And the venture capitalists are part of the ecosystem. Now, when I first started out, a venture capital fund had £20 million, and that was about as big. The UK has got a fantastic venture capital system. The seed funds are very plentiful. The Series A and the Series B, we've got fantastic companies there. But just as a tech company can only grow at a certain pace, so can a fund. So if you're a fund, maybe the best you're going to do is double the size of your fund every time we go from fund 3 to fund 4. So you now look at the biggest US funds who are securing funds, as a single fund between $5 and $10 billion. So that's hard in the UK, but it will come if you get the best UK VCs. If they start doing 3x returns and 40% IRR. Over that, they will start to produce the £1 billion funds, and it will increase.
But were you keen to get UK funding and then it didn't happen?
It's yes and no. It is good because people are here and we're aligned, but it helps to sell internationally. I mean, Temasek opened every door for us in Singapore. We've got our investors open every door for us in the United States. So having a broad geographical funding is a net positive for us.
Jaidev.
I again agree that funding is available for companies that are, and the new standards are, yes, you need to be growing, but you also need to be profitable. Funding tends to, get a bit more expensive in times like this. So I think for entrepreneurs amongst there, I would say from early stage funding still seems pretty plentiful. If you're scaling a company and you're looking for slightly later stage funding, then I do think getting to profitability is incredibly important. Getting to show why your business is sustainable and is incredibly important, and why, of course, growth and customer loyalty and advocacy is incredibly important as well. But if you're early stage, I don't think funding is an issue. If you're later stage, I think funding is there. It could be a bit more expensive depending on whether you raised it, before Liberation Day or after Liberation Day. But generally, funding is still there.
Okay. Well, look, we are 9 months into a new government. They've made growth a mandate. And I'm curious, how can businesses grow their way out of this situation? I mean, you all seem quite optimistic about it, but the general sort of murmurings are quite negative in the sense that a lot of businesses are going to have been hit now with this rise in employer national insurance. We always say that it's not a great tax environment. It's not that rewarding for entrepreneurs and startups in the UK. How do you, as an industry, think you can grow your way out of this?
Yeah, so put it this way, if you're an entrepreneur, you have to be delusionally ambitious, right? I mean, you would never do it if you took a rational view. The rational objective view is that all of us are going to fail. So the idea that a tax increase is going to put us off is the wrong way to think of it. The right way to think about it is it's just one more thing you've got to deal with. I think the tax increase, there's two sides to it. There's a rational side to it, and then there's a sentiment side. The rational side of it is bearable, a 1% tax rise, but it's a sentiment that it's really caused the problem. And unfortunately, I don't think the sentiment's going to get any better. We've got the employment rights bill coming through, and I think that will be a complete disaster, and it'll be a complete disaster for the startup community. Basically, the UK's got a wonderful flexible jobs market where you can't have unfair dismissal in the first 2 years, and that is particularly important in the startup because you have your first few team members, you don't know, you've never hired anybody, you don't know how to interview, there's a lot of churn in that first year, and that is healthy, and most of the people who are let go on to have success elsewhere. If you have to go through tribunals and it's all weighing us down, I just think that's one of that will weigh down startup sentiment way more negative than tax. So, the government on the one hand says it realizes regulation is a problem, but it's still adding in more regulations. So you have to pick a course, and the course has to be the two fundamentals are low tax, low regulation.
Samina, come in.
Yeah, I wanted to give a perspective, even though our perspective on the geopolitical landscape is fairly optimistic, looking up and looking broadly from what's happening in the immediate. We spend every day talking to small businesses. We've hosted a couple of roundtables recently with MPs, with small businesses, and it is really challenging for them out there. Not businesses like ours, but SMEs who are the bakers who are making our croissants in the morning, or
who are all customers.
We are all their customers, who are really the people who are running our high streets. And for them, the national insurance changes have increased their costs overnight, have increased their staffing costs overnight. And so it is, the quote is, this is tougher than it was during the pandemic, because during the pandemic, there was help from the government. Now they're actually getting increased costs coming down from the government. So it's an extremely challenging time out there for SMEs, particularly on the smaller end of the scale. And we know that it's larger SMEs are twice as likely to adopt technology, because the smaller SMEs, they just don't have time to be exploring, what's the best tool for me to use to run my business. They just don't have the time to do that. And we hear that day in, day out. In fact, we were talking to a small business owner who runs multiple cafes and bars across London, and his accountant told him that he needs to make 25% more in revenue this year just to stay even, because of the increased costs that are coming down the line from increased tax. So it is a very challenging time, but what are we doing to help? I think that was your question, wasn't it, Sasha?
Well, it was just how are we going to grow our way out of
Right.
this as a country, really? I know the fintech sector is very ambitious on growth and doesn't feel pulled down by the situation, but as a country, I think we are in not
Absolutely.
the best place.
Yeah, and I think it would be remiss of us not to reflect the sentiment out there, which it is extremely challenging out there, and we're hearing that from small business owners every day. And so that's where we come in. That's where the fintech industry comes in, where it's our responsibility to create accessible solutions to help these businesses survive. And that's where, that's at the heart of what we do at Square, and why we emerged during, the global financial crisis, why we did pretty well during the recent pandemic, and why we think in this new challenging environment where we're trying to, I'm sure we'll get onto the topic of AI, but I'm happy to introduce that. We're really, really bullish about how this current inflection point in technology is going to help us grow our way out of the current situation.
Well, actually, perfect segue to AI. I've literally got 2 minutes. But Jaidev, I read very interestingly that you said that Gen AI can bring humanity back into banking. And I thought, wow, I've not heard anything like that before. How so? And how are you using AI at Zopa?
I'll take both that and the previous question together, if you will. So I think the way for us to kind of grow out of this issue goes back to productivity, right? So as a fintech industry, I think it's incumbent upon us to use the best in technology to drive much higher productivity, because that's what the country needs. But that also allows us then to give more value back to our customers, because we are more efficient. And when people are dealing with money, the one thing that they're usually looking for ease and value. And I think we've been doing very good with providing ease. But I think the other thing we need to go back is value, and that's where technology comes in play. Gen AI, we've been using predictive AI for now more than 10 to 12 years, automating all our credit decisioning, and as a result, savers make more from Zopa, borrowers get great rates from Zopa, and that's one way we have been helping people go through the cost of living crisis, at least. So as we think about AI, Gen AI is the next frontier here. It is already adding productivity today to our developers. They are writing code faster and quicker than ever before. That has been the first most, I think, useful bit that they have been using. It's also adding productivity into our operations, where understanding customer sentiment, responding to them more quickly, identifying vulnerability, identifying where we need to give support. Earlier, all of this was done through human sampling. People would listen to calls and say, oh, here's some feedback. Now, in many places, we've got AI bots kind of reading through all of that and pointing out where we might want to intervene and help the customers more. So that's another place where a good example where we think AI is actually bringing humanity back into banking already. Particularly, it has helped more recently in terms of identifying vulnerability from conversations, and then us for all the conversations that we are having, be that through chatbots or through actually on the phone, and then being able to more in a targeted way reach out. I think the holy grail, if you will, is when that first point of interaction itself is with AI, because that allows us to be far cheaper and being able to kind of deal with a lot of customer queries up front, actually really help them manage their finances better, but where it's required for a human intervention to happen, doing that triaging incredibly quickly so that we can have that conversation as quickly as possible. So that's the way we think about how AI can really help bring humanity back into banking.
Thank you. I think we have so much more to talk about, but unfortunately we are out of time. So please join me in thanking Paul, Francesco, Jaidev, and Samina. Thank you so much.
Thank you.
Thank you.